Asian markets ended today's session mixed, with market players looking out for AI giant Nvidia's results as well as key economic data out of the US later this week. The Nikkei share average rose by 0.22%. The Hang Seng index slid by 1.02%, while the Shanghai Composite Index declined by 0.4%. Over in the United States, stocks rose near record highs on Tuesday. This as traders awaited Nvidia's earnings to assess whether the AI-driven market surge has been overdone or not. Nvidia's share price is up on anticipated strong revenue growth. Investors are also keenly awaiting the main US inflation gauge, that is the Personal Consumption Expenditure Index. That's expected to come out on Friday. The Dow Jones Industrial Average rose by 0.02%. The S&P 500 was up by 0.2%, with the Nasdaq also rising by the same margin. Local markets are trading lower as investors await data to give an indication of the health of the domestic economy. The rand trading weaker against major currencies. The local unit is now standing at around 17.77 vis-a-vis the US dollar, 23.48 against the British pound and 19.77 against the euro. Looking at commodities, gold is trading at $2,504, while platinum is trading at $936 per ounce, while the price of Brent crude oil is at around $78 per barrel. Chantel Marks is the head of research at F&B Wealth and Investments, and she's going to give us an update on how she sees the markets. A very good afternoon, Chantel. As I mentioned in my introductory remarks, markets, they seem to have put on the side the whole issue of monetary policy, and they're now focused on those key Nvidia results as well as inflation data later in the week. What else is going on?
Yes, I actually read an article today saying that Nvidia is now acting like a macroeconomic indicator, or at least its results release is, because it seems as if all the focus today is on Nvidia. I mean, as you mentioned, we do have important inflation data coming through later this week, as well as a few other important data points. But really everything is about Nvidia at this stage, particularly in the US. From a South African market perspective, I think we are also being impacted by some softness coming through in the Chinese equity market and results in that market specifically. We've seen commodity prices coming under pressure as a result, and really the miners dragging down the South African market today.
When you look at the Chinese economy, we know that they're great planners. They have 5-year plans, even longer plans, and they just haven't been doing so well in terms of their economic growth. Do you think that they can overcome this dip that they're experiencing, especially when they're experiencing, sanctions from the likes of the United States and even more recently Canada?
So I think from a longer term perspective, the investment case for China is still in place. I do also see that economy continuing to grow. And because you're not actually seeing a shrinkage of the Chinese economy, demand for things like commodities will continue to improve and increase over time. But this short-term blip has resulted in quite a bit of volatility, particularly in the commodity market as well as in the Chinese equity market. And I think that there will have to be something that stimulates the economy sufficiently or addresses some of the structural issues in the economy, notably the very, very volatile property market or uncertain property market, as well as some other areas that have begun to concern investors.
Yeah. So when you look at our local market, looking at the all-share index, of course, this is the last week of August. How do you think our local bourse is faring? Is it doing much better than, say, it was last year?
Yes, absolutely. The South African market is ticking up nicely. So even though we have days like we are having today, we do tend to outperform on down days as well as outperform on up days. So we are actually winning on a relative basis, particularly next to our emerging market peers. And I think that is really a function of how cheap our market is, coupled with the fact that we've got our elections in the rearview mirror, and the outcome was actually quite benign. So we also have the possibility of some structural and cyclical tailwinds coming through from a growth perspective, and all of this is helping to push the South African market higher.
Just before we run out of time, let's take a look at a couple of counters. PPC, the concrete manufacturer, they announced to their shareholders that they're going to be providing a special dividend, 33.5 cents a share. But of course, aside from this particular announcement, how is PPC doing? Because for the longest time, it wasn't doing well because obviously it's in the construction sector, which has really floundered since after 2010. Is it picking up now?
Yes, you absolutely had a combination of factors weighing on PPC. They were expanding quite aggressively into the rest of Africa, so their debt levels were quite high. This coincided with weakness in the South African construction sector and also loads of cheap imports coming through from the east, cheap imported cements that really provided a lot of competition to them that they couldn't necessarily step up to. So I think that the import story is looking a little bit better. There are some protection measures in place now, and we are seeing early signs of an improvement in construction confidence and also a commitment by government to really roll out infrastructure investment. So I think they're in a good place. Their balance sheet is also pretty much fixed after they underwent a rights offer and sold some of those African businesses. So I think they're in a much better position. And this dividend, this special dividend, tells us that management believes this too.
Frozen and chilled products manufacturer Corp, they released their year-end June 2024 results. Revenue up 15%, trading profit up by 15.9%, HEPS up by over 15%. Essentially, what's the story behind these numbers? They look good on the surface, but what's the story?
Yes, these are absolutely excellent numbers. And if you take it into the context of the industry that they serve, which is basically the food and beverage industry, catering, hotels and restaurants, one would have expected a bit more of a slowdown given what's happening, particularly in the Northern Hemisphere and Australasia from an economic growth perspective, as well as pressure in China. But demand for their products continued to improve, so that revenue number was quite strong. They saw really strong growth coming through from Europe, an improvement in the UK, and actually very strong growth in South Africa as well. That was specifically mentioned by the company. Coupled with this, they managed to really squeeze their or expand their margin, which I think is very difficult in current conditions. And they delivered a very, very solid result. The share price, when I last looked, was up 9%.
Wow. Thank you so much, Chantel, for your contributions there. Chantel Marks, she's the head of research at F&B Wealth and Investments.